in December of 2015. This is called REPAYE. It stands for Revised Pay As You Earn. Revised Pay As You Earn has some of the same characteristics as the other options, but some totally different. And there's also some downside in certain scenarios to REPAYE. So REPAYE, it's going to be 10% of your household income, whereas the others are discretionary income and you have the ability to file your taxes separately. With REPAYE, it's 10% of your household income, regardless of how you file your taxes. So if you're PGY 3 or higher and you're single, you're going to be in that 275-ish range. REPAYE does clock time towards public service loan forgiveness. So if that's the road you're going down, or you want to keep your options open for that, strongly consider the REPAYE option. The best part about REPAYE is that there's a subsidy or a credit of 1/2 of your unpaid interest. So the easiest way for me to convey this is to give you an example. Let's just say you have $200,000 of loans at 6%, just to keep the numbers round. And let's say your payment's $250 a month, just to keep the numbers round. So if you have $200,000 of loans at 6%, you got $12,000 of interest. If you're paying $250 a month, you got $3,000 that you're paying, which leaves $9,000 of unpaid interest. With REPAYE, there's a subsidy or a credit of 1/2 of that unpaid interest component. So 1/2 of 9,000 is 4,500. So if you can get 2, 3, 4, 5 good years out of REPAYE, you might stand to benefit in $20,000, $30,000, $40,000 in subsidies. And depending on what medical specialty you're in, you might have started your residency prior to this program getting rolled out in December of 15. You might not even know about it. You may just see this thing when you do your annual re-up, and because you're not really familiar with it, just keep doing what you're doing. So if you're single and have more than like $100,000 of government direct loans, you should probably be on REPAYE because you will be able to take advantage of some of that subsidy. If you are married to somebody that makes decent income and no loans, that would not be a scenario for REPAYE because your spouse's income is going to drive up your payment, and when your payment gets driven up, it's going to squish that subsidy. So if you're married to somebody with no loans and decent income, you may want to consider PAYE if you're eligible and you didn't have loans before a certain date to get knocked out. There's other scenarios where on a one-off basis, we can talk about where certain things make sense. But for the vast majority of residents and fellows, I would think that REPAYE and REPAYE and PAYE should be the most favorable options.